If there's one lesson that's been taught to me more times than I can count, it's this. The market does not pay you to stay active. The market pays you to be right. And being right very often means learning to do absolutely nothing. That's the hardest part. You understand what I'm saying? Everyone wants to trade, everyone wants action. But the market is not a slot machine. The market is a weighing machine, and it is a waiting game. You don't get paid for being early. You don't get paid for being late. You only get paid when you have the right setup and the patience to wait for it. Now the question is, why do most people fail in this business? Is it because they can't read charts? No. A lot of people are perfectly good at lines and bars. Is it because they don't have enough capital? Not always. People fail because they cannot wait. They need action at any cost. Just like a man who needs cards in his hand no matter what. This addiction to excitement, this craving for movement, is poison in trading. Has it ever happened to you that you're staring at the chart and thinking, let me just put something on so I stay in the game? That urge is what empties accounts. When I started, I was a kid in a bucket shop, watching the tape tick by tick, coin by coin. I thought the trick was to be clever, catch every little move and trade it. And yes, sometimes it worked, but most of the time it didn't. I'd win a little here, lose a little there, and by the weekend I had nothing to show for it except exhaustion. That's when it hit me. Money is not made by constant trading. Money is made by sitting. Money is made by waiting until the real play shows up. It sounds strange, doesn't it, that the most money is made not by trading, but by waiting. But that's the truth. The market knows how to punish impatience. If you chase, you pay. If you guess, you pay. If you force trades, you pay. But if you wait, if you sit with your hands in your pockets until the picture becomes clear, you'll be surprised how the odds start leaning in your favor. The real trick is accepting that you don't need to trade every day. Do you really think big money is made in small daily battles? No. Big money is made in big moves. And big moves don't come every hour. They don't even come every day. They come when conditions are fully ripe, and until then you wait. Understand setups. They're like train schedules. If you miss one train, don't run down the tracks trying to catch it. Another train will come. But you need to know which train you're waiting for and where it stops. Most traders don't even know their setups. They just jump on anything that moves. That's not trading. That's gambling, and gambling is a great way to ruin yourself. You wouldn't walk into a casino thinking you can beat the house by playing every hand, would you? So why do it in the market? My best trades, the ones that paid for houses, cars, and a lot more, didn't come from luck or guesses. They came from setups I knew, from patterns I trusted, from conditions that aligned perfectly. And until they aligned, I did nothing. That's the secret most people refuse to accept. Waiting looks like doing nothing from the outside. But the truth is, waiting is work. Waiting is discipline. Waiting is the trader's real craft. Can you sit in front of a chart and do nothing? Can you stop yourself when your fingers are itching to click the button? That's the real test. I used to think I needed every swing. Up, down, sideways, I had to be in every move. And do you know what the result was? Commissions, mistakes, and a bruised ego. Then one day I caught myself. I realized I don't need every swing. I only need the fat part of the move. That big middle section where the odds are clear, momentum is there, and the setup cannot be denied. That was a revolution for me. Now tell me, do you understand what I'm saying? The market will always give you chances, but not every chance is the same. Some are just noise, some are traps, and some are very rare golden opportunities. As a trader, you have to train yourself to wait only for those golden opportunities. Let's talk about charts. Charts are your map, your compass. They tell you where you are and where the market has already been. But charts do not whisper the future in your ear. That's where setups come in. A setup is not magic, it's just a condition, a signal, a combination of circumstances that tilts the odds in your favor. It could be a breakout above a range, it could be a pullback into support, it could be a volume surge confirming strength. Whatever it is, you need to know your setup like the lines on your palm, because if you don't, you'll start seeing setups on the chart that don't actually exist. Let me be honest. Have you ever tried to force patterns on a chart just so you could take a trade? That's the danger of impatience. You start seeing what isn't really there. And here's another truth. The market does not reward almost setups. Money is not made on almost. Either the setup is there, or it isn't. And when it isn't, you wait. That's the difference between a professional and an amateur. The amateur just wants a trade. The professional wants the right trade. Do you see the difference? I'll give you an example. Once I waited for weeks for a stock to build the right base. Every day it moved a little, teased a little, but it wasn't ready. People around me said I was missing moves. But I knew what I was doing. Then one day, volume expanded, the line broke, and the setup was perfect. I took a strong entry. That one trade made more than a dozen small trades combined, and if I had exhausted myself chasing noise in the weeks before, I probably would have missed it. Now think about your habits. In trading, patience is like capital in the bank. Every trade you don't take, every bad setup you skip, is money saved. And saved money is what works for you when the right opportunity comes. The market will show you half-baked patterns, maybe almost kind of signals. But you have to resist. Why? Because your job is not to play every card. Your job is to play only the winning cards. At a poker table, do you put chips in on every hand? If you do, you're broke in an hour. The smart player folds more hands than he plays. Same rule in trading. Folding is part of the game. Now let's talk about wealth. Wealth in trading doesn't come from making 100 trades a week. Wealth comes from compounding profits over time, from surviving, from avoiding the big losses that set you back months. And why do big losses happen? Impatience, forcing trades when the market is giving nothing, doubling down on losing ideas, chasing moves after they've already happened. Be honest. Have you ever chased a stock after a big breakout, thinking it's just getting started only to watch it reverse and slap you hard? That was impatience. That was lack of discipline. A trader's greatest strength is not his chart, his system, or his intelligence. His greatest strength is patience. Without patience, all other tools are useless. You can have the best method in the world, but if you can't wait for its signals, you're finished. Think about the times you lost money. Did the market really betray you, or did you fail to wait for your conditions? Most traders don't lose because they lack knowledge. They lose because they can't learn to do nothing. They mistake activity for progress. But in trading, it's the opposite. The less you do, the better you do, as long as you act at the right time. Strange, isn't it, that doing less gives you more? But that's the truth of markets. So I'll say it again. Learn to wait for setups. Train your eyes. Know your signals. Sit on your hands until they appear, and when they do, act with full conviction. That's trading. That's how you build. And don't misunderstand me. Waiting does not mean laziness. Waiting does not mean daydreaming. Waiting means preparation, studying charts, marking levels, defining conditions, staying ready. Because when the setup comes, you cannot hesitate. You cannot be asleep. You have to be ready to strike. Do you see the balance here? Too early is wrong. Too late is also wrong. You win at the right time, and there is only one way to catch that moment. Prepare while you wait. The truth is, trading is more about temperament than intelligence. The market humbles even the smartest people, but the patient, disciplined person survives. Why? Because he can wait for his pitch. Just like a batter doesn't swing at every ball, he waits for the one that comes into his zone, and then he swings with full power. That's how you win. So ask yourself, are you swinging at every pitch, or are you waiting for yours? That's the question you need to answer. Let me be very clear with you. The market doesn't care about your opinion. It doesn't care about your need to take action. It doesn't care about your hopes. The market only cares about setups, conditions, and probabilities. You cannot bend the market to your will. You can only align yourself with it. And that alignment comes from waiting until the market shows its hand. You might think waiting is boring, but there is nothing boring about catching a big move. There is nothing boring about watching a trade run in your favor while others are scratching their heads. That satisfaction, that profit comes only because you waited. Boredom is the price of success. The question is, can you tolerate boredom? Can you sit through quiet days without forcing action? If yes, you have a chance in this game. If not, honestly, you should find another profession. I've seen the crowd. The crowd loves excitement. They want chatter, tips, action. But the crowd is usually wrong. Why? Because the crowd is impatient. It cannot sit quietly. It always needs to be doing something, and that's why the crowd loses. If you want to win, you must learn to do the opposite. Stand apart from the herd. Be patient. Wait for your setups. Isn't it logical that if the majority loses, you have to act differently from the majority? Remember, money is made in big swings, in big campaigns. That's where wealth comes from. Not from scraping pennies, not from scalping noise. Big money comes from recognizing a real move and riding it. But to ride it, you first have to wait for it. And most people can't wait. They want the thrill now, the profit now. And that's why they miss the big move. While chasing the small ones. So I ask you, do you want excitement or do you want wealth? Do you want to feel busy or do you want to be right? You can't have both. Trading for excitement is a losing game. Trading for setups is a winning game. Every day the market whispers little tests in your ear. Here's a small move. Want it? Here's a false breakout. Will you chase? This setup is almost ready. Will you jump early? Every day your discipline is tested. Whether you pass or fail those tests decides your future in this business. The hardest lesson is this. To be profitable, you don't need to be active. To be successful, you don't need to be clever. You just need to be patient, disciplined, and ready. Setups will come. They always do. The question is, when they come, will you be there with capital in hand and your mind under control? Or will impatience have already cost you both your capital and your confidence? When I say folding weak hands preserves capital for the right opportunities, I'm saying it from a very practical, hard-learned place. This business is no different from a card table. A fool plays every hand because he thinks he needs to stay in the game to win. A smart man folds more, plays less, because he knows the real test isn't how many hands you play. It's how many you avoid. Do you see the difference now? In trading, survival comes first, profit comes later. And survival depends on how well you protect your stake. Every dollar you put into a bad trade is a dollar. You won't have when the real trade appears. Think about that. Isn't this the most overlooked truth of the game? Your ammunition is limited. Wasting it on weak setups is the fastest way to take yourself out of the war before the real battle even begins. The market does not care how badly you want to be in a position. It only cares about probabilities, and probabilities are never in favor of the trader who insists on forcing weak hands. I've seen people trade like gamblers, throwing chips into every pot, thinking constant action will somehow tilt the odds in their favor. But the market is not a casino, and you're not playing against luck. You're trading against human emotion, crowd psychology, and supply and demand. And when there is no setup, when the pattern is not clear, when the odds are not aligned, you have to fold. Can you really do it? Can you watch the chart moving and still stop yourself from chasing it? That is the hardest thing for most people. Capital preservation is not just about saving money. It is about protecting your confidence, your clarity, and your discipline. Every week, every trade that ends in a loss slowly eats away at your mental reserves. It doesn't just take dollars, it consumes your patience. And once patience is gone, desperation takes over. Desperation is the graveyard of traders. How many times have you watched yourself throw good money after bad just to get back to break even? That spiral always starts with one weak hand you refuse to fold. I remember many moments when I had cash in my pocket, and the tape looked tempting, but the setup wasn't right. The old version of me would take a shot just to feel alive in the market, and 9 times out of 10 I paid for it. The wiser version of me learned to step back. Sitting in cash and looking a little foolish is far better than feeling trapped and powerless in a losing position. Do you see the difference in power? Cash is power. A bad trade is weakness. Every time you fold, you strengthen your position. Every time you force a trade, you weaken it. Most traders hate staying on the sidelines. They believe money must always be working. But the truth is, cash is also a position. Sometimes the best position is no position at all. When you fold weak hands, you hold cash, and that cash is your ammunition. That is what keeps you alive until strong setups appear. And when those strong setups finally come, you'll be grateful you kept your powder dry. You cannot catch every move, and you should not even try. The market is full of noise. Half moves, false starts, fake breakouts. If you chase all of them, you will slowly bleed yourself dry. Folding weak hands means giving up the need to be right all the time. It means accepting that not every opportunity is meant for you. Does that hurt the ego? It should, because trading is not an ego game. It is a discipline game. Let me tell you something clearly. The biggest trades of my life, the ones that truly moved me forward, were only possible. Because I had capital ready. And that capital was only ready because I did not waste it on weak setups beforehand. Folding weak hands is not about missing out. It is about staying prepared. Otherwise, how does wealth get built? Do you really think wealth is made by chasing scraps? No. Wealth is made by catching the meat. And if you live on scraps, you will never have the strength left to take the meat. It is easy to dismiss small losses as insignificant. It is easy to see small mistakes as harmless. But stack them one after another, and very quickly you are in a hole that is hard to climb out of. Weak hands don't just take money. They create habits. Every time you play a weak hand, you reinforce impatience. Every time you fold it, you reinforce discipline. Ask yourself which habit you want to build, and which habit will actually make you wealthy in the long run. Put simply, folding weak hands in trading is the same as protecting your future. You do not know when the next big setup will come. It could be tomorrow, it could be next week. But when it comes, you must have capital ready to act. If you burned that capital on bad trades, all you will do is watch opportunity pass you by. How many times have you told yourself, if only I had capital right now, I could take this trade? That is the punishment of weak hands. That is the price of impatience. Do not lie to yourself by thinking you will make it back later. The market does not offer second chances. When the right setup app appears, it does not wait for your account to recover. It rewards the trader who is ready and leaves behind the one who wasted his stake. That is the harsh truth. Can you live with that? Look at the crowd. The crowd always wants to be in. The crowd cannot fold. It chases, it hopes, it clings, and the crowd consistently loses. If you want to stand apart from the crowd, you must act differently. When they play, you fold. When they chase, you sit. When they rush, you wait. That is how capital is preserved. That is how you survive this game. Every fold is a decision. Every fold says, this is not my hand. This is not my trade. That is power. That is control. The amateur believes folding is weakness. The professional knows it is strength. So tell me, which one are you? There were times when I went weeks, sometimes months, without taking a single trade. People said I was missing action. I wasn't missing anything. I was waiting for my hand. And when it arrived, I played it at size. That is the difference between gambling and trading. Gamblers nibble on weak hands until they break. Traders fold them, wait, and strike when the time is right. Weak hands whisper to you. They almost look right, almost ready, but almost never makes money. Almost setups are what make brokers rich and traders poor. Folding weak hands means understanding that almost is not enough. Either the trade is right, or it is not. And if it is not, the money stays in your pocket. Isn't that the simplest rule, and yet the hardest to follow? Capital preservation is not glamorous. There is no excitement in it. Folding a weak hand does not make your heart race. But it is the habit that separates those who last from those who burn out. Excitement is for gamblers. Wealth is for traders. And wealth is built through discipline, patience, and folding weak hands so that strong hands can be played with full conviction. The beauty of this rule is that it never changes. Markets change, technology changes, patterns evolve, but the principle of preserving capital by folding weak hands remains the same. It worked in my time, and it will work 100 years from now. Because this is not about charts or machines. It is about human nature. Human nature is impatient, greedy, and fearful. Folding weak hands is the antidote to all of it. It is the edge you can always control. So I ask you this. The next time a chart looks tempting but not perfect, what will you do? Will you fold or will you play? Will you protect your capital or risk it on a weak hand? That decision, repeated again and again, is what makes or breaks you in this business. When I say that preparation during waiting is just as important as execution during trading, I mean it literally. People think waiting means laziness, sitting outside the market and wasting time. but waiting done correctly is the hardest work there is. Waiting means studying, sharpening your edge, training your mind so that when the right moment comes, you do not hesitate. Do yo. You think a trader just wakes up, clicks buy or sell, and fortune falls into his lap? No. Fortune is built in the quiet hours. Hours spent watching, writing, analyzing, and preparing. There were days in my life when I did not take a single trade, not one. To outsiders, it looked like I was doing nothing. Inside, I was working. I was watching the tape. I was marking charts. I was learning how a stock behaves when it is strong, and how it behaves when it is weak. That is preparation. Because when the time came, when the setup lined up, I knew that stock like an old friend. I knew how it breathed. I knew how it reacted. And that is why I could act instantly, without hesitation. Now do you understand why waiting must be active, not passive? Preparation is what gives you conviction. Without it, even the best setup feels uncertain. Think about it. If during waiting you did no work, if you did not study levels, understand ranges, or pay attention to volume, when the move finally comes you will doubt yourself. You will hesitate. You will become confused. And where you should be playing big, you will play small. And hesitation eats money. If you are preparing consistently, then the moment the signal fires, you are ready to strike. That is the edge you actually need, right? Many traders confuse patience with laziness. They say they are waiting for their setup, but while waiting, they do nothing. Then when the setup finally appears, they are unprepared. They make entry mistakes. They take TT. Wrong position size. The stock moves a little and they panic. That is not patience. That is neglect. Waiting is not an excuse to stop working. Waiting is the work. Do you see the difference? Let me give you an example. Imagine a stock has been consolidating for weeks. An amateur ignores it and just waits. He hopes that one day he opens the chart and sees a breakout, but a professional studies it every day. He watches how the range is tightening. He observes how volume behaves and how buyers step in at support. When the breakout comes, the professional is fully ready. He knows which price levels matter. He knows exactly how much risk he is willing to take. He knows the precise trigger. And the moment it happens, he does not hesitate. Now tell me, who makes more money? The one who ignored it while waiting, or the one who prepared while waiting? Execution is fast. Execution is the moment you press the button. It takes seconds. Preparation takes hours, days, sometimes weeks. And that preparation is what makes execution possible. Without preparation, execution is just guessing. Many times have you taken a trade just because it felt right, without doing the real work, and how many times did those trades turn into losses you could not even explain? That is the price of not preparing while waiting. Markets reward readiness and punish sloppiness. Setups often appear suddenly, sometimes when you least expect them. If you're not prepared, you either miss them or, even worse, wreck. Organize them too late. But if you are quietly preparing, the moment the setup forms, you recognize it instantly. That is the difference between catching a move early and chasing it late. And do not forget the mental side. Waiting without preparation creates boredom. Boredom leads to impatience. Impatience leads to mistakes. But waiting with preparation keeps your mind engaged. You are not staring at the screen hoping something happens. You are actively studying conditions, refining your plan, and rehearsing your response. This keeps you sharp. Now you can see how waiting transforms from torture into training. Money in this business is not made by trading more. Money is made by trading better. And better trading comes from preparation. Every great trader I ever knew spent far more time studying than trading. They used their waiting hours to build knowledge, create plans, and develop conviction. That is why when the time came, they looked fearless. But that fearlessness was not courage. It was preparation. Imagine a soldier on the battlefield. He does not win because he fires at everything that moves. He wins because he trained beforehand. He knows his weapon. He understands the terrain. Before the battle even starts, half the victory is already decided by preparation. Trading is no different. Do you really believe you can win market battles without this kind of preparation? Preparation also protects you from surprises. The market is full of traps, false signals, head fakes, moves. If you are not prepared, you will fall into them. But if you have studied the stock's behavior, if you have marked your key levels, you immediately sense when something is wrong. You know when to step aside. That is the difference between the trader who gets caught in every false breakout and the one who waits for confirmation before acting. And preparation is not just about staring at charts. Preparation means preparing your mind, preparing your risk plan, preparing your expectations. Before you take a trade, you must already know where you exit if it is wrong, where you take profits if it is right, and how much risk you are willing to take. These decisions are not made after entry. They are made during waiting. So when the moment comes, you do not waste time thinking. You just execute. Simple, right? Most traders do not blow up because setups do not exist. They blow up because they do not prepare for those setups. They enter without a plan, without context, without clarity. They act impulsively, and the market punishes them. If they used waiting for preparation, they would avoid half their mistakes. But they do not. They confuse being flat with being idle. They turn boredom into recklessness. And that is why most people fail. Preparation has another powerful effect. It builds patience. When you are deeply studying, marking, and analyzing, the urge to chase noise becomes weaker. You do not force weak trades because you clearly know what your setup looks like. Now exactly which conditions you are waiting for, and everything else is measured against that standard. That is what gives you the strength to say no to bad trades. This clarity from preparation strengthens discipline. The more work you do while waiting, the less you want to waste that effort on poor decisions. If you have prepared for days for a specific setup, you will not throw your focus away on random trades. You respect your process. But without preparation, every small wiggle starts to look like an opportunity. That is the danger of unprepared waiting. I have seen this countless times. A trader spends weeks just staring at the screen, no preparation, no planning, just waiting. Then suddenly a move comes, and he jumps in blindly. Over-leveraged, no plan, no exit. The market moves against him, and he panics because he never prepared an exit. He loses, and he does not even know why. Now compare that with the trader who used waiting correctly. When the move comes, he knows exactly what to do. Win or lose, he acts according to plan. Tell me, who survives in the long run? Execution gets all the glory, but the real work is done in preparation. During waiting, profits are invisible, but they are there, hidden in discipline, in avoided mistakes, in clarity. The profits show up later when execution is fast and clean because preparation was thorough. The market tests you every day. Can you wait? Can you prepare? Can you hold discipline even when nothing is happening? Most traders fail these tests because they see waiting as wasted time. But when you treat waiting as working time, you pass the tests, and passing those tests keeps you in the game long enough to win. Wealth is not built only by the trades you win. It is built just as much, if not more, by what you do not lose. Do you see the perspective shift? Every trade you do not take, if it is low quality and unnecessary, is an act of wealth building. When I look back at the campaigns that made me money, they were not built on endless activity. They were built on selectivity, on saying no more often than yes, on resisting the urge to act. You may not realize it yet, but restraint is the most profitable skill in trading. How many times have you told yourself you need to take more trades to make more money, and how many times did that thinking give you more losses instead of more profits? That is the trap. The market does not reward effort. The market rewards precision. Unnecessary trades are like termites. They slowly eat away at an account. One small bite does not seem like a big deal, but over time, the entire structure collapses, and you only notice the damage when it is too late. That is what happens when you keep taking trades that do not meet your highest standard. A small stop out here, a minor drawdown there, all feels harmless. Add them together and suddenly all the profits from your best trades are gone. That is the bitter truth. The problem is not that you had no winners. The problem is you buried them under a pile of avoidable losers. Wealth also comes from subtraction, removing poor trades, removing half-baked setups, removing boredom trades. When you remove these, you create space for real trades. Wealth is not built by grabbing every opportunity. Wealth is built by filtering until only the best remain. Does a jeweler keep every stone he sees? No. He sorts, rejects, and discards until only the real gems remain. Trading is the same.